Think regally, think royally. When you plant that seed, it takes time, but you need that tree to be there for the people who can sit under it for the shade later when you're back into the soil.
Take those monies and spread across families.
How to pick dividend stocks. Make sure you watch this full video today because this one is an absolute banger.
Leave a piece for your siblings to give to their children too.
What's up, everybody? Art Turner, Data Productions Media. Dreams are tangible aspirations where we scheme our dreams into existence. Like I said in the intro, I have another absolute banger.
Your seed, marry his seed, marry my seed. That's how we keep harder money all in the family.
You saw the intro with Succession. You heard the music Legacy from Jay-Z. Now, what does all this mean when using those mediums of media? Well, with dividend stocks, our goal here, we're going to try to build that generational wealth that maybe, and if we do it correctly, can transcend our lifetime to our family members, our future children, our grandchildren. And it's never too early to start on the future, okay? Some of the best families in the world in history had the generations in mind past them. When you plant a tree, you don't plant it for yourself. You plant it for the generations that's going to come after you once you're gone. And that's what dividend stocks are. You know, when you find a good dividend stock, it's like you're planting that seed for a huge tree that's going to blossom one day, and the fruits of that are going to, be consumed by hopefully your family members and loved ones and whatnot. So this is an important one today. I cannot wait to get in this. Lots of information, golden information with Gematria. So, make sure you're staying tuned in, you're staying locked in. And if you don't already know, I have my website, dataproductionsmedia.com, where I have all my previous articles, okay? But today, we're just going to get straight into it, how to pick dividend stocks. For starters, we have to know what a dividend stock is. Dividend stocks distribute a portion of the company's earnings to investors on a regular basis. Most American dividend stocks pay investors a set amount each quarter, and the top ones increase their payouts over time. So investors can build an annuity-like cash stream. Sometimes you have, dividend stocks that do monthly and whatnot. So it really depends. There are different flavors out there. The real key, what we're trying to do here, is get that cash stream for ourselves. Okay, getting that extra income that we can build up over time. There's dividend companies that have paid dividends for over 100 years. We're going to get into the different metrics of that and characteristics of what makes aristocrat dividend or a king dividend stock. So make sure you watch this whole video because we're going to get into the nitty gritty and some of those metrics. How to pick a good dividend stock. Let's get straight into the Gematria because it's very powerful. As you see, stocks need Gematria for quality. Gematria helps find the best stocks. Data Capital Dividend Stock List for 2013, they all equal 333 in English Ordinal. Very powerful. We already know stocks need Gematria to find the best ones. And what I'm going to talk about is, I built a dividend stock portfolio for my Patreon supporters. I'm going to get into that a little bit later, but that also has 333. So we're in the right track. We're doing something powerful here. I would be remiss if I don't bring up a solid 33. As you see, quality equals 33 in English reduction in the purest English cipher. So keep that in mind. Quality Gematria equals 38 in the Chaldean cipher. If you don't remember, the Chaldean cipher is based off the scientific sound vibrations. So it's very pure in a lot of senses. And in a lot of cases, a lot of people will think it's the purest cipher since it's based off sound and it's not necessarily in order. So, but keep that 38 in mind as we see. Look, energy equals 38, money bags equals 38, Gematria equals 38, good stocks equals 38, all in the reduction cipher. You see money bags, Gematria, good stocks equals 142 in reverse ordinal as well. 52 in reverse reduction for Gematria and good stocks. But that 38 is very important. When that pops up, you're in the right place. So when you're decoding stocks, it'd be nice to see a 33, a 38, because you already have those base decodes of what are really important. Financially free and dividend stocks both equal 52 in the Chaldean cipher. 52 is another big number in regards to money and currency. Dividend stocks can provide you financial freedom over time. This is a long-term game. You can't go into dividend stocks looking for a quick buck and thinking, it's going to work. If you want to do that, maybe risk it on penny stocks, which we do. Maybe risk it on growth stocks, which we do and we are successful at. But for this lane, for this angle and how we're trying to elevate ourselves, you have to have that long-term mindset when you're building a dividend portfolio, because that's how you get financially free. Okay. And so let's get into some of the metrics of what to look for when picking a good dividend stock. Okay. I have some good notes, some good pointers that everybody needs to keep in mind as they are researching. A good dividend stock is going to have a low debt to equity ratio, 2.5 below, but preferably you want that below a 2. In most cases, you want that below a 2 because you don't want your dividend stock to have too much debt to their assets or their equity. Because again, we want that excess income for ourselves. That's why we're invested in it. And if they have too much debt, are they even paying off what they need to pay off? Okay. Growth's important for dividend stocks as well, but not as important as a growth stock. Okay. So you want your debt low unless it's for a very special reason, per case basis. And so let's see what Investopedia says. The optimal debt to equity ratio will tend to vary widely by industry, but the general consensus is it should be above. It should not be above 2 by most metrics. The debt to equity ratio is often associated with risk. A higher ratio suggests higher risk, and that company is financing its growth with debt. However, when a company is in its growth phase, a high debt to equity rate might be necessary for that growth, as we already went over. Low debt to equity ratios with dividend stock investments equals 222 in English reduction. Now, we might not be in 2022 anymore, but 222 transcends years. All right. It's a decode. It's an angel number that you should look for regardless of the year because of its strength. Okay. So even though we're in 2023, 222 is still very relevant. Debt to equity ratios higher than 2 is no good for dividend investing. That equals 303 in reduction. Keep that in mind. Very, very, rare scenarios where you want to get into a dividend stock that's above that 2.0 debt to equity threshold. Okay. You're going to have to make a great case for that. Number 2 on the list is strong cash flows. You need strong cash flows for your dividend stocks. Okay. What does a healthy cash flow look like? A positive cash flow simply means more cash that's flowing in than is coming out, which is essential for a company to sustain long-term growth. That's what Forbes says, but it's really simple. Are you making money? Are you profiting? Okay. Are you bringing them those dollars? If you're a company that's not bringing in dollars, why are you even paying a dividend? Why would I look at you? You're not making money. Okay. So strong cash flows are important. That's why, a lot of these dividend companies, they're matured, high market caps, saturated markets where they're going to be bringing in because they have these large contracts. If they don't have strong cash flows, you're setting yourself up for a tough sledding road because they might cut their dividend payout at some point. Their stock price might go lower. And these are things we don't want to happen. We want to get in these dividend stocks at a really reasonable price, hopefully closer to the bottom than not, so we can have some growth on the price. but also it's raising its dividend payout each year. Okay. Strong cash flows in dividend stocks. We have 380 in ordinal, which goes back to that 38 with good stocks and reduction. We also have 137 in reduction, which is the 33rd prime. So you know that's very important. Strong cash flow is important for a lot of dividend stocks, equals 222 in reduction. You know that's important. Our next point, expected earnings growth between 5 and 15%. We want our company to continue to grow. We understand it's not going to be in that growth stock category or that penny stock category where it's going to have that exponential growth. Most dividend companies are already established, but you still want them going in that uptrending direction. So 5 to 15% of earnings growth is good. A good dividend will have an expected earnings growth of 5 to 15% per year, equals 303 in reduction. Very important when you get those 33s. Increasing earnings per share, EPS. Earnings per share is calculated as a company's profit divided by outstanding shares of its common stock. The resulting number serves as an indicator of a company's profitability. It is common for a company to report EPS that is adjusted for extraordinary items and potential share dilution. So, really simple decode here. Increasing EPS in dividend stock, they both equal 139 in ordinal, 212 in reverse ordinal, and 77 in reverse reduction. So it has strong correlations in the 3 of the 4 base English ciphers. So you want a dividend stock that has an increasing EPS. Growth still important here. High return on equity is the next note on my list. Return on equity is the measure of a company's net income divided by its shareholders' equity. ROE is a gauge of a corporation's profitability and how efficiently it generates those profits. The higher a company's ROE percentage, the better. The higher percentage indicates a company is more effective at generating profit from its existing assets. Likewise, a company that sees increases of its ROE over time is likely getting more efficient. If the company's ROE turns out to be low, it indicates that the company did not use the capital efficiently invested by the shareholders. Generally, if a company has a ROE of above 20%, it's considered a good investment. So keep that in mind. As you see with the Gematria, dividend, a high ROE, both equal 71 in English ordinal, 145 reverse ordinal. Reliable management equals 71 in reduction. Return on equity, 20% or more, equals 137 in the reduction cipher, the 33rd prime, which is a total big sign to follow that. You want your return on equity over 20%, okay? With that decode, the 33 is right there in your face. Why not follow it? Uptrending industry. You want to be in the right industry, right? You want to be in an industry that has potential in the future that you see. It's way more risky to get into an industry that's dying and putting your money in there than one that's growing, okay? So follow the tides. High tides rises all ships. You can get those sympathy plays, all right? And that's very important. FOMO from the retail investors. So you want to make sure you're in the right sectors that are going to do well in the future. So you got to do your research, watch the news, see what's going on in the world. Dividends with future industry growth, 133 in Chaldean. Strong industries produce strong stock prices in those industries, 222 in the Chaldean cipher. Before we get into the second part of the dividend stock video, I want to let you guys know I do have a Patreon page that you can help support my YouTube channel. Lots of great content on here, so much so, okay? So this is a Gematria stocks video, just so that you guys know, I have for $5 a month, Gematria stocks newsletters and notes tier. For $5 a month, you get monthly updates on the stocks that I'm looking over. And recently I just started a dividend portfolio, the Data Divi Pack, okay, where you have the 10 the stocks that I added to the portfolio this month that we're going to be monitoring, each month going forward and see what type of growth we get. As you see, already posted, and it's the DataCap 2013 Dividend Pack. I give a completed list of our 10 individual dividend stocks. The portfolio's initial investment for those 10 was $440 and 12 cents. The portfolio gain to date of the 26th. When I posted about it, we're up 46 cents. Obviously, not a big gain, but that's not important here. We're just going to get those payouts over time and let it drip into our portfolio. Again, we're just planting seeds for the future. And again, each month I'm going to offer new ideas to add to the portfolio, and I'm still going to be doing some deep dives on growth stocks, pennies, and stuff. So remember, this Gematria stocks newsletters and notes tier are $5 a month. Very valuable. Okay, make sure you check that out. If you don't like stocks, just know I have my sports stocks as well, which is only $5 a month. HD quality videos, no ads, cheaper than Netflix, I might add. And right now, I have 19 full-fledged 30-minute or longer videos on my catalog. Okay. 19, and I'm working on 20 this month. So if you love my sports documentaries, if you want premium content that's too raw, too uncut for YouTube, make sure you join my monthly sports documentaries. Okay, that's another highly valuable tier on my Patreon, and I know you'll enjoy it. If you love sports, you love Gematria. But if you want to support both my Gematria stocks and my Gematria sports docs, you can get my Dream Schemers Ultimate Woke Pack, which is only $8.63 a month, which is a $1.37 discount, the 33rd Prime, and you get both. High value, for under $10. You get so much knowledge. So if you want to join my Patreon, this is how you do it. Please consider it. It helps grow my channel. I put it right back into the growth of Data Productions Media, and I would seriously appreciate it. I give you guys my effort every day, and it's just a way to show support. But regardless, we're going to keep grinding, and I'm going to keep providing free content so we all can continue to grow as a unit, which we are. If you're not a part of my Discord community, make sure you join. It's a free Discord. The link is in the description below. All right. Also in the comment section, join, hit the link. I have over 300 people in this community. We talk stocks all the time. We talk spirituality. We talk conspiracies. So it's an all-in-one community with lots of gems and gold of information. All right. And on this day of recording this, in 2021, GameStop hit its all-time high price of $347.51. Data Productions Media, Data Capital Investments would be nothing without that squeeze of GameStop, because that was my first big time win when I got in at $9. So make sure you join the free Discord I have, because we might get into the next big squeeze. You don't know, but you have to take the first step. Join that Discord. And if you didn't know, I started a second YouTube channel, which is strictly sports, no Gematria, because YouTube doesn't like pushing out Gematria videos a lot of the time. So I wanted to start a second channel for a second avenue of growth, which is called the Sports Vault, ESPN Enemy Number One. So a lot of great content, sports conspiracy content without the numerology, but it all is very enticing, intriguing, and you'll love it. Okay, so if you support Data Productions Media, please go check out and subscribe to this channel as well. If you're not subscribed to Data Productions Media, subscribe, please. Like this video. If you're not subscribed to the Sports Vault ESP number one, go hit that subscribe button as well. Sustainable dividend payout ratio. Sustainable equity dividend payout equals 137 in English reduction. The 33rd prime keeps coming up, which means it's important. All right. The companies you want to invest in, you need to make sure that they can sustain that dividend payout. All right. You don't want them cutting back. You don't want them going too far forward with the dividend either. Just little by little over time, make it worth it. Brick by brick. That's what's important here when you're building a portfolio with dividends. It's brick by brick. It's not fast. It's just sustainability, good foundation, and that's what we want to do. All right. That's why they're called dividend kings and aristocrats. It takes years, centuries, generations to build your castle, to have your land, and things like that. Think regally, think royally. All right. That's why they're called dividend aristocrats. So what makes a dividend aristocrat? A dividend aristocrat is a company in the S&P 500 index that not only consistently pays a dividend to shareholders, but annually increases the size of its payout. A company will be considered a dividend aristocrat if it raises a dividend consistently for at least the past 25 years. These are the things you want to look for. Buy dividend aristocrat discounts and dividend aristocrats on a discount both equal 133 in the reduction cipher. We understand the importance of 133. It's a huge investment number. It might be the biggest investment number, arguably, depending on how you look at it. So this is why you want to buy discounted dividend aristocrats, because when they're on discount, you have some growth there to get in. So we're always on the lookout for those, especially in 2023 when they're saying the recession is going to get deeper. We're already in a recession. Don't believe them. But we're going to be finding those discounts all year. That's why you have to join my Patreon, because that's where I'm putting them. Buy dividend aristocrat discounts 2,202 in English Sumerian. Dividend kings, all right? Dividend kings are even better than the aristocrats, okay? They're the top dogs, all right? These are the people we want to be. These are the kings of the castle, brick by brick. They fought for it for the top, all right? So these are the ones we need to be looking at in the companies we should be searching for, because they've done it for a long time through recessions, so many, distractions within the markets, so many matrix events, but they've still been able to reach that growth. Dividend kings are stocks that have raised their dividend for at least 50 consecutive years. 50 years, all right? That's a long time. To raise your dividend consistently for 50 years, that's solid work. Dividend kings have survived periods of inflation, commodity booms and busts, rising interest rates, recessions, market crashes, changing consumer tastes, technology advancements, and more. They stand the test of time. Timelessness. All right? Because when it comes to these, when you plant that seed, it takes time, but you need that tree to be there for the people who can sit under it for the shade later when you're back into the soil. Dividend kings, stocks, holy grail, both equal 68 in the reduction cipher. Keep that in mind, okay? All right, last but not least, really not least, because it's so important in the stock market, strong and consistent management team. You could have a great product. You could have a great business model. You could have so many good things about a company. But if your management team isn't strong and consistent, how can you trust it for a dividend? All right? It's so important. Strong and consistent leadership needed for quality dividend stock equals 222 in the Chaldean cipher. So you know it's important. And that's regardless if it's a dividend, you need a strong management team. Business world is hard enough. There's so much going around in this world. It's hard enough to make money. And if your management team that you invested in is not doing the right things, not trying to help the company thrive, then it's tough sledding. Tough sledding. And I know this for a fact with the other plays I'm in. It's so true. It's a time-tested fact. You need strong and consistent management. Strong, consistent leadership team equals 133 in reduction, 2,202 in English Sumerian. Strong leadership needed for dividend equals 2,022 in Sumerian as well. So you see those 222s popping up, those 222s. Reliable management, consistent payments equals 71 in reduction and 100 in reverse reduction. So you see the similarities there energetically. And so, guys, that's what I have for you guys today. How to pick dividend stocks. Hopefully this was great. And hey, again, if you want to get more information on what dividend stocks I'm investing in, my community is investing in, and how we're going to continue to grow that portfolio, make sure you join my Patreon. If you want to stay updated on my more real-time moves or just thoughts and perceptions, join that link to my Discord. It's free. That's how you get in contact with me, and that's how you talk to me at a more personal level. I would love to have you. The community would love to have you. Make sure you like this video, you subscribe to the channel for more updates if you aren't already subscribed. But guys, that's all I have for you guys today. Art Turner, Data Productions Media. Dreams are tangible aspirations where we scheme our dreams into existence. I love everyone. I love you all. We're going to have a great 2023, and I'll see you guys in the next video.